What's up, everyone? It's Scotty with Money Investing. Welcome on board for another Market Open live stream. Hope you guys are doing fantastic on this Friday morning. Last trading day of the week, and markets obviously brutally selling off yesterday. QQQ more specifically down over 2.3%, rebounding a little bit pre-market up over 78 basis points. We got the SPY pushing higher over 0.5%, and the Dow Jones obviously was very green yesterday, also pushing higher pre-market today up over 24 basis points at the moment, and some rebound happening for individual stocks as well. So Tesla up a little bit over 1.5% after having a brutal sell-off yesterday. Nvidia also pulling back over 1% here. Netflix up over 13 basis points, so not really all that much. We got Apple here up over 43 basis points as well. So hope you guys are doing great. Thank you so much for joining. If the audio and the video is good, just give me a thumbs up in the live chat. Just want to make sure that everything is working well. And we'll go over some upgrades and downgrades for the day. Next week, we've also got the NASDAQ rebalancing that takes place. Today, we might get some financial release from NASDAQ, kind of understanding how much those weights will be dropped for these individual stocks. And I have a separate video coming out later today going over that entire scenario, entire process, and what that might mean for the market next week. So Monday is going to be the day when it becomes effective. So going over to some upgrades and downgrades here. Let's see. McDonald's gets an overweight rating from KeyBank. Amazon buy rating from Trust. We got Discover downgraded from Piper Sandler. Carvana downgraded from Piper Sandler. We got Blackstone to neutral from JP Morgan. Eli Lilly as overweight. Price target raised to 560 by Morgan Stanley. Harley Davidson to buy from DA Davidson. We got Bank of America upgrading Consolidated Edison. SiriusXM downgraded by Deutsche Bank. Live Nation to outperform from Oppenheimer. Reiterates Nvidia as outperform. Alphabet has outperformed from Bard, raising price target to 130. Roku has outperformed. Microsoft has outperformed, raising price target to 400 from Goldman Sachs. And they mentioned that concerned the capex intensity may reach $45 billion next year. We see $30 to $35 billion being more likely. We expect $2 to $5 billion in dedicated supporting Gen AI services from Microsoft as well. So those are very quick upgrades and downgrades. And again, yesterday's profit taking, it was very clear where the money was coming out of. It was mostly tech, mostly the Magnificent Seven, the large cap tech, which have rallied quite a bit on the year. Money coming out of those stocks and going more towards defensive, utilities, financials, energy. Those sectors ended up performing really well. And of course, that as a result, Dow Jones was pushing higher as well. Now, next week is going to be very, very important, probably one of the most important weeks here, because we've got Jay Powell, so we've got the FOMC, and not to mention the big tech earnings are also coming out. So earnings so far have been very, very, very resilient. All of the companies that have reported already, over 70% of the companies have exceeded expectations. So they are coming in very strong. And of course, they're solidifying that potential scenario for a soft landing as well. And as a result, the markets are obviously cheering that scenario. Let's see, again, going back to tech. So again, it's too early to say, but right now you can see that we are bouncing back a little bit higher, and this does happen usually after a very, very strong red day. So for example, Tesla down almost 10%. It's very normal for us to see a bit of a push higher, 1.5%, 2% pre-market and intraday. But again, we'll continue to monitor throughout the day. It doesn't really matter where the market's open. What matters is where we close. And you can see, oftentimes markets kind of push higher intraday, push higher by noon, by 1 p.m., by 2 p.m. In the last couple hours, just like sell right back down and give up on all those intraday gains. So again, it's not really, it doesn't matter where we open. What matters is where we close, how strong we close on the day. So that's something to keep in mind throughout the day as well. All right, who cares about Papa J when we got Papa K giving us all the data info? Milan, thank you so much. I appreciate that. What is the next big earnings? So we've got all those big tech coming out. So Microsoft, Google, Apple, Amazon, they're all reporting in the next couple of weeks. So that's about as big as it gets. These are the biggest companies in the US, not to mention in the world. So we'll be obviously paying close attention to these companies and how resilient their earnings really are. Can you check WSM and BMY? So yes, Bristol Myers. I think I've done a video on this company before. But right now, again, you'll notice that we have mostly been consolidating sideways, although it has been in a decent downtrend. So it's been making these lower highs and these lower lows. A little bit of a falling wedge pattern as well for Bristol Myers, and now it's trading right above that 200 simple moving average on the weekly chart. So if you do see a breakout above this 21 EMA, sitting roughly at 65.85, then in my opinion, there is potential for Bristol Myers to trade even higher, get up to 69, close to $70. So first resistance right over here. That's the $65, $66, and we're also getting a very nice bounce off of that 200 SMA. And the next resistance is going to be at 69, close to $70. Very strong dividend yield. Decent fundamentals, I would say. It's been a little bit more inconsistent, but we're trading at 18 times earnings, 2 times sales, a little under 3 times sales, and a little bit over 10 times cash flow. So not really that bad. Valuation's pretty decent, and earnings expected to modestly grow over the coming years. When it comes to the balance sheet, again, they've got a lot of debt, over $30 billion of net debt on the balance sheet, so that's something to keep in mind. I will look at this from a more trading perspective and not really from an investment standpoint just yet. WSM, Williams, Sonoma. So I have done maybe like some technical analysis on this. I've never really looked at it from a fundamental standpoint, but it does seem like it's been making this symmetrical triangle with this lower high and this higher low. Once again, getting a bounce back higher from that 200 simple moving average. So the next resistance is going to be closer to these levels at 144 for this company. Oh, I'm just like in such a bad jet lag right now. It's really hard to stay up during the day here because it's like nighttime over in the US, and I'm just like so drowsy during the day. If you have any tips on how to combat jet lag, I'm open to all ideas. But let's see. AXP earnings are out. Seems close to the fair value. Yes. So American Express did a video on them yesterday. Down over to 3% right now, 171. So, let's just take a quick look on what they reported. Looks like they beat on EPS, but a slight miss on, actually a pretty sizable miss on revenue. And let's see what the actual guidance looked like for this company as well. All right, so seeing no cracks in credit spending momentum. American Express isn't seeing any signs of slowdown on the horizon. Spending looks strong, the consumer looks strong, and we just don't see any material cracks as we look out at our credit book. And he says delinquencies held flat sequentially during the quarter. He notes that AMX's strength may be in part in higher income base of cardholders. And that's one of the things, right? I mean, the reason why American Express only has less than 20% of the market share, Visa has over 50%, is because it's far more difficult to qualify for an Amex than it is for a Visa. Most people have a Visa, but very few people have an Amex. So again, that's the higher income base of cardholders. That's exactly one of the reasons why they're not seeing as many delinquencies as maybe some of the other payment processing and card issuing companies. Cocktail, melatonin, Ambien synchronize your brain and sleeping cycle. Okay, thanks for the tips there. Coffee or energizers. So yeah, coffee, I mean, yeah, just to stay up during the day. Maybe that'll help. But also, like, I've been getting up at 3 or 4 in the morning. I'm not able to sleep past that level, that time, because, again, it's like it's daytime over in the US, and I'm just like, I wake up automatically at 3 in the morning or 4 in the morning and just can't get back to sleep. And then I sleep at like 9 a.m. or like 3 p.m. It's been terrible. I mean, it's the first couple of days. I mean, it usually takes about a week to settle, but yeah, it's been pretty brutal so far. Kevin says, just go to bed, man. Get like 12 hours of sleep. I wish I could. I mean, your body automatically wakes up. You know, it's just like one of those things, like you go to bed and you hope that you're going to sleep well and get 8 hours, 10 hours, 12 hours. But at 3 a.m. and I'm like, just looking at my ceiling, I'm like, oh, great. But yeah, I mean, I'm hoping to get some sleep tonight. We'll try my best. Tomorrow's the weekend, so we'll definitely try to sleep in, see if it works. Yeah, no, I always try to do it naturally. I don't wanna take melatonin or anything. Like, I've never really taken any of these things. I always like to do things naturally, like meditate or try to figure it out on my own. All right, so any small caps, anything that you're worth is a deep dive. So Lee, that's a great question. We'll definitely take a look at some of the small caps. IWM, as we talked about, has been on the move. It's been pushing higher very nicely, getting up to $198, close to $200. The last couple of weeks have been very strong for IWM. It's rallied a little bit over 6.77%. It's actually outperformed the NASDAQ and the S&P. So we'll take a look at some of the individual stocks. One of them was obviously InMode, which has done incredibly well. Market cap's still under $4 billion, so I consider this to be a small cap company. Obviously, it's done really well, up over 40 to 50%. Not this week, but last week it was up over 18%. So very strong move to the upside after the earnings came out, but it's now settled at a resistance at the moment. So it's just companies like these that are, profitable, doing really well, excellent margins, are the ones to look into, in my opinion, from a small cap standpoint. So opinion on Baba, any video coming? So finance, I actually did a video on Alibaba not too long ago, so you can definitely check that out if you haven't already. Just go on the channel Money Investing Alibaba video, and you'll find plenty of videos and analysis that we've already done on Alibaba. But again, looking at it quickly, we talked about the fact that now the risk, the regulatory risk has de-risked. It's no longer there, but they are going to still regulate and oversee the industry as a whole. It may not be specific companies, but they are going to still continue to regulate and oversee the entire industry, in which Alibaba also belongs to, right? So that is something to keep in mind. It's just a little bit shifted. The risk has just shifted a little bit away from the company, more towards the industry. So this is going to be that lower high. Right now, we're still kind of struggling at that level. If you do get a breakout, the next resistance is going to be all the way up to 105. And a potential breakout past this level is going to be all the way up to 126 for Alibaba as well. Sandy says, just go to the mall during the daytime, shop something, the shop grocery, keep yourself away from your house for the entire day, and from next, you will be fine. That's actually a good idea, but then I'm spending money, which I don't really want to spend. I'm going to the mall, and I'll definitely end up buying something, so I'm like, okay, do I really want to be up that bad just so I can be spending? But no, that's a good idea. That's a great idea. I think I can go take coupons. Kevin, is American Express even worth looking into? They had earnings this morning. Yes, so I just briefly broke down their earnings earlier. So we talked about that. Michael Jackson sleeping chamber. That's hilarious. Get a workout in. Yeah, so that's something I need to get started with again. So we'll definitely do that. What do you think about what is next for Tesla? So did a couple videos on Tesla. Yesterday. Right now pushing higher 1.5%. I think 240 is a reasonable level that it could come down to. Obviously, the selling pressure was very strong yesterday, and this is something that we exactly saw in the last earnings as well, right? Margins compressed. Institutional investors, Wall Street people don't like that. They don't think the margins compression is a good thing in the short term, and as a result, they sell the stock. They take some profits off the table, and that's just the way it is. I mean, long term, we know what Tesla's doing, what Elon Musk's visions are, but of course, institutional investors don't see it that way. So it is what it is, but I wouldn't be surprised to see it in the 240s for Tesla, and that's exactly one of the reasons why we sell calls, right? We sell calls to hedge our downside. If it weren't for the calls, I would have been down so much yesterday on Tesla alone, but the calls definitely softens the blow. When you are up on a position, or when you have a sizable position, it's absolutely a no-brainer to hedge your potential downside. So short-sighted on Tesla, and that is very true, and it is just the nature of the markets and institutional investors, and how they kind of position their portfolios. Because if you really think about it, right, they're looking to beat the market. They're looking to beat the S&P every single year. And that's how they get their clients. That's how they get more assets under management, and they're able to charge 2 and 20 for it. So if they don't beat the market, they don't get the bragging rights on Wall Street. So if Tesla is not performing, again, fundamentally it's still performing, and the stock price is still up year to date, right? It's still up 121%, 122% year to date. But if the production numbers, as Tesla mentioned, third quarter production numbers will slow down because the factories are going to go under some improvements, some upgrades, which, if you think about it logically, right, if the company is going to take a temporary hold on production. So two things. Number one, they guided for 1.8 million vehicle deliveries this year, right? That in itself is a 50% compounded annual growth rate. Number two, even after they're going to deliver 1.8 million vehicles, they're doing these factory shutdowns temporarily to improve the quality of the production process, the efficiency, the robots that make the vehicles, do some upgrades. That should be great, right? That should be long-term. That should help the company become even more efficient. But no, it's somehow seen as a negative in the short term. Is teleperformance a good entry long-term investment? Market thinks AI will destroy communication services, but I have different views. Can you share yours? Thanks. So what's the ticker symbol? I would love to know what the ticker symbol is, Jesse, and I'm happy to take a look at that for you. What are your thoughts? Was this a blip, yesterday's pullback, just because there was NASDAQ rebalancing and today markets will rebound from here and no continuation of that pullback? So as I mentioned, the 21 EMA for a lot of individual stocks is going to be very important to watch. So if you come over to this chart, we talked about this in one of my previous videos. Apple, very, very close, coming down to that 21 EMA. Amazon, very, very close. So, so far pre-market is getting bought up. So we'll see if it actually validates that level or if it breaks down. Tesla broke down yesterday. So we'll see if it actually trades back above 268, 269 to retrade back above that 21 EMA, or if it continues to be very weak. And Nvidia also at a very critical level at that 21 EMA, and so is Meta. So I think a lot of it depends on whether these moving averages continue to validate this uptrend, because from a technical standpoint, that's what we're in. We're in an uptrend. We're making these higher highs and higher lows, and we are consistently getting bought up on this dip. Every time the market and individual stocks come down to their 21 EMA, we get bought up very nicely. The moment that breaks is when the technicals turn, is when we see a shift in the overall trend. That's when we could potentially see some lower highs, some lower lows on a short-term basis. So that's where I'm really paying attention to from a technical standpoint. All right, so that's that. Do you follow Ron Walker? What do you think of this theory that we put in a top and are starting a crash? I actually don't, but if you can share some of the research, I would love to take a look. But the fact that we've put in a top and are starting a crash, again, crash is a very, very, I feel like it's been used a lot, but it's not really that common, because remember those tiers that we talked about, right? So as I mentioned before, when I say pullback or a dip, what I'm really referring to is a 2 to 5%. Correction is more like a 10% sell-off. Bear market is more like a 20%, as we know, as we experienced last year. And then a crash is what I consider 50% or more. And again, crashes, they're not that easy to come by. Like, you don't see that very often. So when I say a dip or a pullback, what I'm really referring to is the S&P 500 maybe coming down to this 4450 level. So you can see that 44. You see that gap inside that circle? That's the 21 EMA. That's also that support. That's going to be an under 3% dip for the market, which is normal, right? Which is a healthy profit taking for the market. Same thing for the NASDAQ. That would be a 4% sell-off coming down to that 21 EMA and this previous resistance. Again, very reasonable. Nothing to write home about. So 2% crash run for your life. Yeah, so again, that's just a pullback and a dip, and then again a correction's a little over 10%. So my expectation would be a reasonable pullback and dip down to those moving averages from the S&P. But if we break down below those moving averages, if we break down below the 21 EMA, like Meta, for example, or Apple, for example, Amazon, for example, just trading at those 21 EMA, then we could maybe extend that to a correction for the market. That's going to be my sort of expectation from the market more near term, is reasonable dip, pullback over the coming weeks. If you see one, and of course, if you break down below those moving averages, then that could be extended into a correction. Steve, thank you so much for joining in. Happy to see you. Hope you're doing well. ASML, nice rebound pre-market, pushing up 2.8%. Yep, so seeing a very reasonable rally back higher, of course, yesterday's earnings. And it's kind of crazy, right? I mean, when a company can raise guidance, improve margins, and the stock can still sell off. Beat on EPS, beat on revenue, provide some very strong numbers, and yet sell off. Shiv, yeah, that's great. What's going on with that mustache and that beard? Yeah, I actually did trim a little bit. I had a much longer beard earlier in the day, like you should have seen my other video. I did trim a little bit because the market was down, so I got rid of it a little bit. But we're back to growing it for the next 1 week. We'll see what happens, but yeah. So ASML, nice rebound pre-market, 2.8%. Did you already start the position? So yeah, already did. Again, sent out all the alerts. Did a couple of videos on this already for all the members. So yeah, bottom line, optimistic about this company long term, but obviously pricing wise, still a little bit more on the overextended side at the moment. So going back over to the NASDAQ, the S&P, and the Dow over here. Market's going to open in about 20 seconds now. You caused to market to trim. Alex, no, I'm fine. It should not be any issue there. Beard equals new red mic. So, yeah, I mean, as I said, right, if the market sees a dip or a correction, I'm going to shave. If it doesn't, I'm going to keep it. So that's why it got really long up until yesterday. And then some of it came off. Now I've only trimmed a little bit. But, of course, if you continue to see the sell-off, all of it's going to come off. Anyway, so TLPFI. So, Jesse, those are 5 letters. I'm assuming that's listed on the OTC market. So, TPLFI, is it? No, it is TLPFI. Okay, yeah, so listed on OTC market. I don't cover too many of these companies that are listed on over-the-counter because they can be incredibly speculative, volatile. You can see the volume isn't really there. So it's just not worth looking into these companies because 13,000 shares is literally no volume. It is really, really illiquid, right? There's no volume. You're going to have a really hard time kind of getting in and out of these positions because of the lack of liquidity that this company carries. Not saying that it's a bad company. I haven't looked at it at all. But I just prefer companies that have at least 1 million shares in average trading volume and then at least over $1 billion in market cap. That's kind of like those 2 basic thresholds that I try not to avoid when it comes to investing because anything that's under $1 million, anything that's under $1 billion in market cap, the probability for speculation, for manipulation is much, much higher. So I'd much rather look into, higher market caps, higher volume stocks, than as opposed to something that's like 13,000 shares. So CSP on CRL, that's actually a good idea. We might look into that as well. The only thing that CRL doesn't check off for me is the balance sheet. Otherwise, this would have been like an easy no-brainer. It's got great fundamentals, consistently growing revenues and earnings, and forecast is pretty good as well, going from $10.37 to almost $16. That's 60% growth over the next 4 to 5 years. Revenue also expected to grow very nicely. But if you take a look at the net debt, just a little bit under $3 billion. So again, not the end of the world, but that's the only thing that kind of makes me a little bit more hesitant in being invested in a Charles River. But current ratio is over 1.4, quick ratio is over 1.2. Debt to equity over 1. So, and then debt to free cash flow also I think is pretty good for this company. It doesn't say on TradingView, but and then shares outstanding have also kind of stayed flat for the most part. Yep, so gone from 47 to 50 million. So not a lot of share dilution either. But yeah, 181 would be a decent strike to look into for Charles River from a cash secured put standpoint. $30 days out, $440 premiums. That's actually not bad. What strike is that, Milan? Is that 180 or is that 200? All right, Tesla giving up on some of the gains here. Still up though on the day. It's kind of it's one of those days where the confidence for a green day is not really that high. I mean, I wouldn't be surprised if a lot of these names turn negative on the day because of the momentum that we saw from yesterday, 190 strike. So So 185.60. So that's a 2.3% return on collateral, which is not bad. Not bad at all. And the cost basis will be 185. So yeah, that's a pretty good trade, I would say. Pretty good cash secured put for CRL. Alex, Tesla or Netflix, which is a better buy now if you have to choose? Oh, I mean, I would say Tesla personally, but they're both trading at a higher valuation, but Tesla is slightly better in terms of the quantitative analysis versus Netflix. So that's the only edge I would put Tesla, but they're both trading at a valuation that I wouldn't be comfortable buying either of them. But since you're giving me a choice between one of those two I have to choose, I would say Tesla. So Matt, how does Lulu look to you? So Lulu is a fantastic business. It's a phenomenal company, very well run, very well managed, great brand, great clothes. But again, valuation's a bit of a concern. Fair value is obviously a lot lower than where it's trading at the moment. They've got very ambitious goals of pretty much doubling their revenues and earnings and everything in the next couple of years. And you can see that earnings expected to consistently grow from like $10 all the way up to $17. That's a 70% growth over the next 4 years. And revenue also expected to go from like 8 billion to 13 billion. So, they're on track to doing really well. But again, looking at 52 times earnings, 40 times cash flow, a little under 6 times sales, just have to ask yourself the question if that is a price that you're willing to pay for the growth that Lululemon has. Me personally, this is definitely on my radar. I would love to own it, but it's just not at these prices. And they've got a very, very small amount of net debt, 148 million. So, all right, quick look at GPK. I don't know what that is. Graphic Packaging Holding Company. Okay, so decent volume, decent market cap here. Growing revenues, margins are pretty small. Seems like it's a packaging company. Paper-based packaging solutions for a variety of products to food, beverage, and other consumer products and companies. So this would be a very defensive stock, right? They do pay dividend, 1.6%, but I would consider them to be a very, very defensive company because they provide packaging services for food and beverage companies, and that's defensive in itself. Very nice trend. I like the overall uptrend here, making higher highs and higher lows. So you've got this very nice valuation from those moving averages every time it comes down to that level. So we'll keep a close eye at those moving averages. Right now it's trading right at that support. And then of course that 21 EMA at 24.15 is going to be a very strong resistance to break out of for GPK. Then maybe it has potential to see 9 to 10% rally back to all-time highs. So you're not going to see a lot of momentum for this company because, like I said, it's more defensive, less volatile. Down 15%, up 15%. So it's a low beta stock. The vol, yeah. I mean, boring days without football. I mean, it's gonna get started very soon here. August I think is when the season starts, right? Or maybe September is when the season starts. But yeah, I mean, when the Premier League is not going on, it is pretty boring on the weekend, especially. August, yeah. Yeah, underperformed AMD against NVIDIA because it has little to no exposure with AI. NVIDIA obviously is the leader in artificial intelligence, but AMD is still kind of lagging in that area at the moment. But as soon as they come out, with their announcements of their own, I do expect a lot more momentum. But low 80s is where I would be willing to buy Advanced Micro Devices. That's really the price that I'm looking at for Advanced Micro Devices. Yeah, I mean, price action looks weak, folks. It doesn't look that strong. Wouldn't be surprised if we do end up red for these individual tech stocks, or the NASDAQ also rolls over. So that is something to keep in mind. Matt, how are you using AI right now? So using really Bard for the most part to get a lot of research done fairly quickly. I've noticed that it is accurate, a lot more accurate than ChatGPT. And and then also exploring some of the other sort of platforms to help create content, whether it's video, text, images, and then kind of really streamline the whole process of content creation. So that's really where the focus would be, to kind of be more efficient. And that's the whole point, right? AI is not going to replace, well, I guess it's going to replace a lot of jobs, but for the most jobs, for jobs that do require a lot of expertise, it's really there to help you become more efficient and reduce and streamline your process. So everyone, in my opinion, definitely needs to be using AI, at least to some degree. Really think AMD will ever go back to $80? Well, it's already at 110, and $80 is only 20% away, so it's not impossible, right? I mean, you on a casual basis, you see AMD drop, 20% here. This right here was another 24% sell-off, and right now it is only down 15 to 18%. So a man can only wish. So anyway, so Vault, did a whole video on that on ASML, so we talked about it. But that's going to be it for today, everyone. I really appreciate you, and thank you so much for joining in. As Kevin says, go get some sleep. I'm definitely going to try my best to get some sleep. But thank you so much for joining in. I really appreciate it. Markets right now definitely higher, getting a little bit over dead cat bounce on the day after the brutal sell-off yesterday. But I'm not super confident that we're gonna see a significant rally. Wouldn't be surprised if some of them actually do end up turning red on the day. So thank you so much for joining. I really appreciate it. Make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. And if you have any questions, email, message, I'll get back to you as soon as possible. Happy investing, and I'll see you all in